Good evening, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is, what is today? July 16th, 2012. Lots to talk about, so let's get. Alright, so let's take a look at the SPY, which is the ETF that tracks the S&P 500. This is the SPY chart here. And in yesterday's video, I did say that normally after a big move like this, such as a big move like this, and a big move like this, and a big move like this, over here, what you normally get is a 25% retracement, and that's pretty much what we got here today. So if you kind of just eyeball it, this is 50%, half of that is 25% here. So we actually got a little bit more than a 25% pullback. So that was validated, and the reason why we probably didn't had any lower today was because today's volume was super low. You're looking at under 100 million shares traded today. So whenever you have a low volume like that, you have to give the upside bias to the markets. However, I did say in the previous video that after a big move such as this one, we normally get a 25% retracement, and that's actually what we did. What we actually essentially did in addition to that is we created this doji candle here, and if you look at the volume, just like I said earlier, like 2 seconds ago, the volume is just unbelievably low. So what does this mean? Well, just like anything else, I mean, this is just basically a pause day, a day that it's just flat. No, there's no volume in the markets. There's a lot of economical data coming out this week as well as far as um, anything anybody's going to be concerned about. I think everybody's just on standby mode for today. Mondays are normally low volume days, but today is exceptionally low. I think it's it's one of the lowest of the year. So normally after a big move like this, we consolidate to the side and then we get another pop on top over there. And again, I'm still in the same boat that unless we close below this bottom trend line over here, we're not going to see a big move to the downside until that actually happens. This bottom trend line over here. And that's if it even happens. Okay, so right now we just have to keep an eye on this. We did see some weakness here with this candle here. So the only caveat that I mentioned in the previous videos was today's options is the beginning of the options expiration week, which has a lot of volatility. I also did mention that this is probably a head fake, meaning it's an institutional bull trap, and the way that works, or the way that sometimes you can tell me, it doesn't work all the time, but again, I'd rather stay out of the market and not lose money than go in the market based on this move here, which in my opinion, even if you were to jump, even if this was higher volume, I don't know if I would actually enter into the market on to the long side simply because the move was so big. To me, that would be considered chasing. And in fact, to be honest with you, whoever jumped into the long side on Friday's close, they're losing a lot of money today, and they probably, if anything, got stopped out because it was basically a 50% retracement there. Okay, so that's just something to keep in mind. So today was a flat day. I expect there's a higher probability. Of course, I would not base a trade off of it. There's one thing, I never base my trades off of Fridays and Mondays and day before and day after holidays. On because I have an upside bias. I know I always say I have an upside bias because of the volume being so low. I would never make or base my trades off of that alone. You're gonna need additional factors, including with the low volume, to dictate an upside bias or an upside move to actually put money down on it. So what I mean by that, well, it's simple. Just because it's low volume, and chances are maybe 70% chance that it'll probably float higher based on the low volume, it's not enough for me to actually take a trade on that. I mean, I've seen a lot of people get burned taking a trade on just the fact that they think the markets are going to float higher based on low volume. It doesn't work that way. What you're going to need is supporting factors, like say the market was in good support, and then the next day is going to be Friday or Monday, and then that normally has an upside bias. That's multiple factors, meaning you already are in strong support, and if you're going to get an upside bias float, then yeah, okay, then it wouldn't hurt taking a long trade. But just basing a trade off of especially after a move has already been made, simply like this move had been made on Friday. It I would give it more a higher percentage ratio that we would actually have a 25% retracement, which is what we had today, even though today is known to be a low volume day, which it was. Of course, they created this doji candle, and that's because it was low volume. I think if it wasn't low volume, you probably would have had a candle that looked like something like that. but because we had a low volume day, the markets were able to recover intraday. Okay, so that's pretty much it. I'm still in the boat that we would probably consolidate. And again, this is just a guesstimation simply because this week is options expiration. So there's going to be a lot of volatility. And if you look at the intraday, I mean, this is the intraday chart. This is the start of the day. This is the end of the day. I mean, you can see the volatileness, right? I mean, we came down, we came all the way up, created this bull flag. We came all the way up, we popped over, right? And then we just came right back down again. Then we came right back up again. I mean, it was just a very volatile day, and it was low volume. So you got low volume plus volatility. I mean, it's just really it's just gonna be an up and down thing. I'm expecting to see more volume coming in this week later as economical data comes out, and I'm gonna expect to see a lot more of this kind of trading on the intraday. So of course on a daily chart it just looks like a doji candle. Didn't look like very much happened, but as you can see in the intraday there was a lot that happened, and there's a lot of intraday trades to be made and a lot of money to be making on those intraday trades. All right, so I'm still in the camp that I'm actually very happy we had this 25% retracement, just like I mentioned in previous videos. That if we can get to this 137.06 level up here at the end of the week, then that would be best case scenario in my opinion for a pullback. So either at the end of this week, we hit this level, or if we come close to it, then I'll probably wait for Monday because obviously Monday is low volume. It gives an upside bias. That would be the perfect trade in my opinion if we actually reach these levels on Monday, then I would definitely take a short in the market. Right now, going long is just not something that I'm looking at right now. I'm standing on sidelines, waiting to short the market because it's close. Okay, and we are still in the downtrend. The bigger picture is a downtrend. If let me show you. So this is the weekly chart of the SPY. I mean, the bigger picture is obviously in a downtrend. We still have this down move here, and right now we're creating this bear flag. I mean, we hit this 137.06 level. That's my guesstimation that we should be breaking down from this bottom trend line over here. So the trend is still down longer term, and nothing has changed in the pattern or in the charts yet that's telling me otherwise. So I want to trade with the trend. So going long right now is trading against the trend, and you're at a higher risk when you trade against the trend. Okay. All right, this is a chart of the UUP, which is the US dollar. So real quick here. Oh, actually, look at that. We're almost into this 2280 level here. All right, so in the previous video, I said, okay, so we had this double top that I was able to pierce through. We did not confirm above this candle here to validate this breakout. So instead, what happened? We came right back down on Friday, which was that big move on SPY. As we all know, the dollar up, markets down, and dollar down, markets up, and it's just a inverse to the markets, just like the VIX. Today, the markets were kind of, in the middle, kind of volatile, but the dollar did pull back. And again, it's not a 1-for-1, but it is definitely a tick for tick. So as you can see, the dollar was down, but the markets created a doji. So if you look at tick by tick, markets down, market even in the intraday, when you look at the not the market, yeah, when the market goes down, then you see the dollar tick up. But again, it's not penny for penny, therefore the candle creation will be a little bit different. So again, we have this level at 2280. This is just a mathematically calculated level. It's I don't have any pink line here, so I don't know if it's gonna hold up as much. Maybe intraday it might. I would like to see this 20 moving average come into this 2280 before this UUP gets into this level, and then that'll validate a bounce for me. If not, to be honest, if it breaks through this 2280 level, then we should theoretically get a bounce off of this 20 moving average. And if it breaks through that, then we have this bottom trend line support here. So we are coming into a lot of support on the dollar, and I do expect the dollar to go higher. Again, the dollar is in a confirmed uptrend, and there's nothing telling me otherwise that the trend has changed. And so if the dollar's in an uptrend, that means the markets are in a downtrend. All right, this is the DX, which is also the US dollar. I like to look at both charts because some charts, sometimes conflict with each other. Um, I really got to start saving these drawings. There we go. Okay, so same thing as the UUP. The DX went up, it broke through, but then it didn't confirm a close above that candle there. So we kind of broke down. Whoops. All right, let me make this chart a little bit nicer here. All right, so we broke down, and we're coming into this 20 moving average level there. So we are going to have some support around this this area here, which is you have this pivot top. We actually did, if I can just guess here, yeah, we did get some support already in the dollar. So theoretically, if we can come down to this level here, we have the 20 moving average and this pivot top over here. We should we should get a bounce midweek. So if this happens towards the middle of the week, you know what? To be honest with you, this looks really good. So it looks like that maybe Wednesday, we may actually get a bounce here, and I might actually initiate some shorts because if we stay bullish for the first half of this week, then the second half I would not doubt, or I would not be surprised if the institutions bring the markets down simply because they want to whip everybody out who was long, because everybody went long because of the move on Friday. So that would make sense, and to whip out any longs, they would have to drop the markets, and then after the options expiration week is over, then I do expect more downside in the following days because again the trend has not changed. Okay. There's only one chart that I like really, still like a lot, and that's the Seagate Technologies here. Let me load in my drawings. As you can see, Seagate went right back into into these two levels here. As you can see, how powerful these levels have been or have become. Okay, so just a brief history. Just a little while ago, I shorted the STX there, and I sold it down here. Made about a 20% profit. I would have held it for longer, but because it was into major support, I sold it, and that turned out to be a good idea. And now we're into pretty good resistance. And the only bad thing is I was expecting Seagate to get up here this fast. So because it already went into these two levels here and it pulled back intraday, let's take a look at the intraday. All right, so this is just an example of how powerful these levels, these calculations can be. So these are levels that nobody else has. These are calculations that I've made on my own. So we had a down move. This is intraday. This is the start of the day. This is the end of the day. And we went all the way up into this gray line, which is this 26-27 level. Okay. This is a 10-minute chart, by the way. And then we just pulled back from there. So it just looks pretty good. For me to take the short trade right now would be premature, in my opinion. Um, if and it's only because of timing. Okay, so if this was, on a Wednesday or Thursday, then if this happened on a Wednesday or Thursday, then maybe I would have considered taking a short now. But because it's a little bit too early for that, and I do see some upside tomorrow. I expect some upside tomorrow. I probably won't take a short on the STX until it reaches at least to the upper trend line here. In fact, to be a little bit more conservative, I can actually draw the trend line this way. No, actually, that way there. So a little bit higher. And then, that'll be it for the STX in my opinion. I'll take a short, and I expect more downside. And if you weren't watching my previous videos, the reason why I expect more downside on STX is not only is there good resistance on the daily chart, but there's also good resistance on the weekly chart here. As you can see, the weekly chart is going to be right into this 20 moving average and right at this breakout point here. So that's pretty good. That's pretty good resistance in my opinion. And let me delete all the drawings here just to show you what the pattern looks like. And it's just simply a down move here, and then what you have here is a rising triangle or ascending wedge or ascending triangle, whatever you want to call it. I call it a bearish flag pattern, and your next stop will be down to this 50 moving average, which is a pretty big drop in my opinion for a stock that only moves about let me see uh, moves about $1, on average. In any case, nothing much has changed in the previous video. I kind of explained what I thought was going to happen. That turns out it's turning out to happen that way once again. So that's good news because now we can actually follow the markets and make sure that or actually I should say make sure I trade accordingly. Again, this is not a recommendation to buy or sell anything. It's just my opinion. I'm just letting you guys know what I'm doing in those stock markets. I'm kind of tired right now, so please excuse if this video is kind of on the on the lower side. But in any case, I really appreciate you guys coming by to check out my videos. You know, um, uh, that's pretty much it. And if you guys have any questions on any other stocks that you want me to look at, I'll be happy to look at them for you. Mathematically, these mathematical calculations don't work on everything, but so far everything I've used it on, it's worked pretty well. So in any case, this is your 7-minute market update. God bless to you all. Good luck to your trading this week, and I hope to see you in the next video.